What is going on, everyone? As we've been saying, the market is heating up big time. We are in the heart of earnings season, and we saw some pretty crazy stuff in the market today. We will talk about a very unusual and not expected move that happened in the market today from a billionaire trader, Bill Ackman. But we also have to talk a lot about some great setups for tomorrow, as well as a $37 million trade we came across today. Yes, $37 million on one trade. Today's big money trade is one of the biggest we've seen. So we have a lot to go over today. But Tom, the market also made history today as the market has had 15 Mondays in a row that have been green, which set the longest ever win streak for Mondays. So we'll take it.
Yeah, we'll take it right during this time where the market's having a pretty bad past few weeks, right? Like, look at how bad the SPY has looked over the past few weeks. But hey, I guess if 15 Mondays in a row have been green, I guess everything's good. And hey, it kept it up again. You know, today was a nice green day, and the day started off rough today, Mike. We had a bad sell-off this morning with the SPY, ran all the way down to 418. It actually broke that 420 support in a pretty good way there. But then we started ripping right back to the upside pretty much right as the market opened. We only dipped down for 15 to 20 minutes, then started flying right back up. And a lot of these big tech stocks were really recovering today. I noticed Tesla had a big pushback. Actually, did they end up green today? Barely, 0.04% in the green. So it was good to see that. And of course, like you said, we have all these big earnings coming up this week that will play a big role in the markets. But I thought it was very interesting just to see that the SPY really ripped back here. We dipped under that support momentarily, but if we go out to a daily chart, a lot of stocks started to kind of turn back around today, which gives me some hope for this week, especially with the earnings coming up.
Tom, I'll tell you, this morning, right around market open, the market was moving to the downside with some steam. You know, like it was like really tanking down, and Tesla and AMD and Apple were leading the way. And then the next thing you know, the money printers came on and shot the market back to the upside. So very interesting day for that. But, you know, this week will be so important because we are in the heart of earnings season right now. This week is where like a lot of the big boys come out and report. Tomorrow we have Coca-Cola and Verizon before market open, but really the star of the show will start tomorrow after close, which is Microsoft, Google, Snapchat, Visa, and stocks like that. But it's going to be a very exciting week, especially on the earnings side of things.
It is, and I cannot wait to see what Microsoft and Google report. Google's going to be very big for those ad revenue numbers, and I think that that'll actually impact a lot of other companies, even like Meta and a few others that rely a lot on ads. So watch a lot for Apple. Of course, Microsoft is big into the AI game, so they're going to be very important as well there tomorrow. I know there's going to be a few people placing bets on some of these, Mike. I don't really recommend it, but hey, if you do, make sure you keep your risk here and you calculate it nice and well. But tomorrow morning, Coca-Cola, Verizon, even RTX, Spotify is one that kind of is an outlier tomorrow, Mike, in pre-market. So keep your eyes on those. Looking like a good week, though. We're going to have a lot of opportunities across many of these big stocks. And looking at them today, Microsoft had like a pretty good move back up. And I know lately a lot of these tech stocks have been selling off in a major way. So maybe these earnings can help flip the script a little bit. But with how Tesla reported, I kind of doubt it.
That's the thing. So you look at a chart of Tesla, and it was pretty bearish. You know, a lot of selling pressure came in, and it came in pretty hard. But at the same time, Tom, Netflix had a decent reaction, and it's still holding up just fine. So it's like kind of like a push and pull so far for this earnings season. And I want to point this out as well. So let's go back to the earnings chart, but let's show it on like a week-by-week basis. We can see that this week, October 23rd, has the most earnings reports out of any other week. So like, you know, in terms of direction, if we see a bunch of these big tech stocks tank off to the downside, that'll be like the rocket boosters, but, you know, to the downside. It'll make things a lot more violent and explosive to the downside. But at the same time, if these earnings come in clutch and, you know, just good and surprise people, it can kind of be like the saving grace to the market. But one thing that is for certain is that earnings season always brings in volatility. So in terms of short-term trading opportunities, you should be very excited.
Exactly, and that doesn't mean that you necessarily have to go out and trade the earnings individually, right? Like, it doesn't mean that you have to trade, like, go out and buy Microsoft tomorrow and swing it through close, or go out and buy Google and swing it through close, or anything like that. But these tech stocks are going to affect the major indices like SPY, QQQ. A lot of ETFs will be affected, obviously. And whenever you see these bigger moves come out of these tech stocks, it's going to affect the other tech stocks out there too. So it's weird. It's like a snowball effect that just keeps getting larger and larger and larger. And then it's going to eventually hit a big brick wall. And that's where we'll see all those buyers and sellers start to go crazy. But it's going to be a fun week, Mike. I can't wait to see it. Hopefully we see more moves like Netflix, like you pointed out. That was one hell of a move with earnings.
Yeah, no doubt. But Tom, what I will say as well is if we look at, we'll call Old Faithful, TLT, this follows interest rates, and this has been tanking down in a major way. And when this tanks down, it means interest rates are rising. But you guys will notice today was a little bit different. At open, this thing just started rocketing to the upside. And basically what happened is we have this, billionaire trader, Bill Ackman, that basically covered his short on bonds. And basically he said, you know what? There's too much risk in the world right now, and I'm not going to short bonds anymore. And this is actually extremely important because we've seen a bunch of big money traders, whether it be hedge funds, billionaires, institutions, and a bunch of whales, we'll call them, shorting bonds, which guess what that does? It makes interest rates go higher. But when we see like a shift in sentiment, just like we're seeing now with Bill Ackman, it makes everyone rethink and be like, you know what? Maybe we shouldn't be short bonds anymore. Maybe the interest rate giant increase, maybe the top is in. Maybe interest rates are just going to go flat from here, right? And it really just changes the whole sentiment around interest rates, which is very, very, very important because interest rates have a giant effect on the economy, but also the stock market. And, with Bill Ackman, I kind of agree with them. If the economy is really weaker than the Fed officials think it is, and, if we do see an escalation in some of these wars around the world, whether it be in Israel or Ukraine or China or wherever, that can cause a lot of people to buy bonds. So very interesting.
Yeah, and this year, a lot of people out there did not think that yields could get up to where they did here. Like, look at the 10-year Treasury yield, TNX. It got up to 5% the other day. What a milestone. It hasn't been there since 2007. Ackman has been making bank on this move to the upside here. He's been a professional on this move. I mean, this has been a great move to the upside in yields for him, which is great. It's good for him that TLT was falling down, and now he's switching that position. He's essentially, in a way, trying to sell at the top, in my opinion, Mike. Yeah. And we see TNX at 5%, US 10Y. That is a major, major level, 5%. That is, you talk about psychological levels, right? I mean, that's almost like Apple at $100 or SPY at 500 or, something crazy like that. So just keep your eyes on it. Whenever it kept hitting 4%, we kept seeing big dips back to the downside. So I'm wondering if this 5% area will maybe be at least a short-term top. And I do agree, it's about time that these yields come down, right? Like, the economy's getting so bad that at some point here, Powell's going to have to start easing or maybe even opening the money printers again. Who knows?
Uh-oh. Yeah, I mean, Bill Ackman is taking his profits and running. But either way, very interesting, and it honestly had a huge effect on the market today. But what's also worth noting when it comes to interest rates is that every single recession since 1971 has actually followed interest rate hikes. And guys, guess what we've had over the past couple of years? A giant interest rate hike. So, just because every single recession since 1971 has followed interest rate hikes, that doesn't mean this time it's guaranteed to be the same way, but, it definitely isn't the best sign. Essentially what this means in English is, there's a pretty good chance we have a recession coming our way.
Yeah, and there has been some lagging periods in this. Like it says, the longest lag was before the recession in 1990, but you can see that there was a little bit of lag going on there, but overall, this can last a couple more years. But I'm kind of with you, Mike, in the way of thinking that the economy's getting to a point that something's going to give, right? I think everybody's just waiting for that house of cards to kind of start crumbling. We can't even get a Speaker of the House, voted in here. So it's getting rough out there for the United States, and especially for consumers. We talked about credit card delinquencies a lot yesterday, which plays a lot into showing how bad it is for consumers right now. And yeah, it's never good, Mike. We've been seeing rates getting way too high, way too quickly, and it sucks. But Powell and the Feds have been really putting way too much pressure on the economy. And these are the same people who said transitory statements, a couple years ago. Like, I'll be honest, they just react to the data. They try to, foresee it, but they've been wrong so many times, it seems like.
Yeah, and we don't want to sound super negative or anything, but when we see important data, we're definitely just going to tell you guys how we see it. We're always going to tell the truth. So with everything being said, the economy is starting to struggle a little bit. And with rates moving the way they are, it is something, definitely worth noting. And Tom, what's very interesting is I saw this data earlier today with the percentage of NASDAQ 100 stocks that are actually hitting new 52-week lows. And this surprised me. So basically what we're seeing right now is a pretty large increase in the short term of the percentage of stocks in the NASDAQ 100 hitting new 52-week lows. It's around 8% so far, which is not very high at all. But what you'll notice is if you look back throughout the past couple of years, we have seen multiple times where the percentage gets all the way up to 40% or 25% or even 20%. And at the way it's currently moving, you can't help but, at least consider like a, extended move down. So I guess what I'm trying to say here is that a lot of times when we've seen this data tick up the way it currently is, we do tend to see, even more NASDAQ stocks hit new 52-week lows. So it's just another bear sign just to, keep on your radar going forward.
Yeah, and I didn't realize that 8% of NASDAQ members were hitting new 52-week lows. I mean, that's pretty wild, but thank God this is only 52-week lows and we're not saying like 104-week lows or something, because if we had to go back to the highs of 2022, boy, I think everything would be hitting like 104-week lows. But it's pretty rough out there, Mike, but it's definitely an interesting chart. I would not have thought that there would have been 8%, like you said, and I especially did not think that during 2022's downtrend that these percentages were that high, but that just goes to show that when the NASDAQ falls, that a lot of those major tech stocks were taking pretty big hits, and that's kind of what we're starting to see again with how a lot of these tech stocks are selling off.
All right, good stuff. Well, Tom, let's get right into some fun stuff for today, which are some setups for tomorrow. One stock I'm watching very closely is a stock, in my opinion, you can't not watch in the short term, and that is TLT. And I am watching it to the upside. The comments we saw from Bill Ackman today are pretty sentiment shifting. On top of that, interest rates are hitting some pretty, I guess you could say, notable levels, like Tom talked about, 5%. So I do think TLT has a good shot at popping to the upside in the short term. When TLT pops up, that means that interest rates are falling. And generally speaking, not always, but generally speaking, when interest rates rise or when interest rates fall, that has a good effect on the market. So either way, I'm watching TLT to the upside in the short term.
Yeah, that's going to be awesome, Mike. TLT is so low, even like when we zoom out on a longer term chart, like for shares, it seems like a great way to go. And even for options in the short term here, it's going to be really fun. So I love it. That increased volatility from Ackman should definitely add some fun here over the next few days for this one. Man, and a lot of tech stocks did good today, but one stock that did not hold up was AMD. And we've been watching this one for a few weeks now, and it almost got under $100 today in a good way, but it fell down to like $99.40 and then came ripping back up. I'm going to watch it tomorrow. If it gets under $99.50 or like $99 even, I will look at more puts. I thought that was a pretty bad way that it closed today compared to many other stocks, and this $100 support is major here. It's a huge psychological level, so if we get under here with AMD, AMD, I'll look at puts. At the same time, though, if the market explodes and AMD comes roaring up off support, I might look at it to the upside even, but I'm watching the support very closely. It's going to be a big level and turning point, I think, for this stock.
All right, sounds good. Another stock I'm watching pretty closely is Coinbase, COIN. This one had a pretty solid day today, as many other crypto-related stocks did, and I think in the short term, the upside potential is pretty good with this one, and Bitcoin is, almost at 32,000 again. So with it moving the way it is, it definitely helps Coinbase.
Wow, I cannot believe Bitcoin is running up the way it is. Even today at the end of the day, since the market closed, Bitcoin's ran up like another $300, $400 here. So let's go Bitcoin. If you guys didn't know, Bitcoin obviously trades 24/7. It's one of those cool. I wish the market did that in a way, Mike, but then again, I would never go to sleep. But but with my next play, I'm looking at QQQ here. QQQ starting to bounce pretty well off this intraday support right around 355.50. I really like this level heading into tomorrow. I like that little dip end of day. That makes me have some confidence that I think that this one could possibly come up and retest that 360-ish area tomorrow, if not even higher, if the market keeps up with this good momentum. So I'll be watching for a push towards 360 is a nice target, and maybe even target 361 after that. I wouldn't go too much higher, though. Just make it a nice, safe scalp up to those levels.
All right, sounds good. Well, it's now about that time for the momentum plays, and with the first one, we have Penn to the upside.
Man, the casino stocks were on fire today. If Penn goes ahead and breaks above 21.20, go ahead and look at calls.
All right, so that's ticker symbol PENN. With the next one, we have RIOT, also to the upside.
Riot, yeah, nice triple top almost going on here, right around $10 even. So if they break back above $10, maybe go to $10.05. If they break 10.05, then look at some calls.
Sounds good. And with the last one, we have the powerhouse, Apple, for both directions.
Yeah, Apple was pretty mixed today, I'd say. If they end up falling back under 172, then eye up the puts. It could be a pretty good put play. At the same time, though, they had a nice recovery. If they break above 174.50, which is right around support from the past few weeks, then go ahead and watch that resistance. If we break above there, then look at calls.
All right, so we have the upside level for calls, the downside level for puts for Apple, and then don't forget about Riot and Penn with their upside levels as well. These plays are only plays if they break the levels Tom listed. If they do not break, then they're not a play and you shouldn't play them. So nice and simple. But Tom, today's big money trade doesn't even deserve the title big money. We're going to have to call it massive money or something else. I don't know. But anyways, we have a $37 million trade today with ticker symbol LVS. So Las Vegas Sands, big money trader dumped $37 million into the LVS 40 strike call options that expire on March 15th of 2024. So basically, these call options are in the money. They have some time to them. LVS is bouncing off a big support right around $44. And, clearly someone's pretty bullish on this one, Tom. A $37 million trade is some serious money.
Yeah, that's pretty cool. I'll be honest, Mike, I am actually pretty bullish on these casino stocks in the shorter term as well. I think it's awesome to see LVS starting to trend up here, but it wasn't just LVS today. We saw the whole entire sector trend up. MGM, Penn Gaming, Wynn, WINN started also trending up. I'm actually getting some shares of these companies. I think they'll be pretty good to buy up on this dip. And there's actually a big event coming up in Las Vegas here with Formula One over the next couple months. I believe November 19th, Formula One is going to have a race in Las Vegas, which is supposed to draw in more people and be bigger for the city than any of the biggest fights in history. I mean, we're talking bigger than the Mayweather fights, bigger than any of the fights with Tyson, Holyfield, anybody. So it's pretty big. It's going to be a big event. I've heard of hotel rooms going for 20, 30 grand just for a couple nights there. So let's see what it does, Mike. I think LVS will start to come up off the support pretty well, and it's definitely sold off pretty hard. I think it could fill the gap pretty easily back up to 48 to 50, if not even higher.
All right, sounds good. And, let's say the stock gets rejected. What are some, key support levels and some points where it's all right, maybe maybe the stock's going the other way.
Yeah, so 44 here is a pretty big area of support. You know, we're seeing a lot of bounces here the past couple weeks. I would say if you're getting into some options, I would definitely look at a stop loss down below here somewhere. Maybe if you want to be a little riskier, you could use like $40 as a stop loss if you're using shares. But if you're using options, I would probably cut if it starts to fall below like $43.50 or $43. I would not let it run too much to the downside. These casino stocks, keep in mind, if everybody out there is correct and everybody is right and we're going to have a bad recession or a big pullback in the market, these casino stocks generally do terrible during those times. So keep in mind, those lower supports on LVS will be very important to watch.
And what's cool is, like, you know, let's say the stock breaks below support, but then at a later date breaks back above it. You can always re-enter the trade, worst case scenario as well. So keep that in mind going forward. But, you know, with everything being said, you know, we have a lot of great setups that we covered in today's video. You know, a historic big money trade. We have billionaires completely changing their sentiment with bonds right now. And overall, there's just a lot of great action. So, Tom, do you have any final thoughts or anything else you're watching for tomorrow?
Yeah, it's going to be a big day. I still want to go to the economic calendar. Later in the week, we have those durable goods orders, GDP numbers on Thursday. Don't forget, Powell speaks in after hours on Wednesday. But the big thing will be those earnings tomorrow. Watch KO, Verizon, General Electric, RTX, Spotify, General Motors tomorrow morning in after hours. Microsoft and Google will be huge. So let's go, Mike. Let's have some good volatility here the rest of this week. Today was a pretty fun day. You know, the market had a nice pop back to the upside, which I thought was pretty cool. You know, we haven't had a nice green day in a while, but I'm curious how long this sticks with us, right? It seems like we're starting a nice little uptrend, so hopefully it at least lasts for a couple or a few days.
Yeah, and guys, in every single video, we cover big money, multi-million dollar trades, setups for the next day, important earnings, important economic events, and everything else you need to know. So if you're new to the channel and you're not already subscribed, make sure to subscribe and you'll see our videos recommended to you more often. A lot of the charts that we post in the nightly videos are things that you'd never otherwise see. So make sure to subscribe, see and hear from us more often. And besides that, guys, let's have an amazing week in the markets.